Good afternoon to all of you. I would like to say hello to Professor Samanthe and all the team's distinguished panelists, ladies and gentlemen. Well, first of all, I would like to thank the organizing committee for inviting me to this very important gathering. And then I hope that the end of this gathering will come up with very important initiatives, which seems to me is very timely also to push this the topic into a higher level. Ladies and gentlemen, I don't want to repeat the background why we are talking this topic this afternoon, because I believe that we have a session before we discuss it, with related topics. Yeah. But allow me to speak from my background. I'm coming from the supervisory agency of the Republic of Indonesia. We supervising and regulating financial institutions in Indonesia. And then very recently, we facilitating some financial institution toward a sustainable finance initiative. So this is also a very important initiative that I would like to let you or everyone knows, and how the difficulties that we face and the challenges remain for futures to come. Ladies and gentlemen, let me brief you on the unique roles of Indonesia Financial Services Authority. This Financial Services Authority, actually, according to the mandate, is basically responsible for supervising and ensuring the healthiness level of the financial condition of each single financial institution in Indonesia. So, compared with similar agencies around the globe, I think this Financial Services Authority very much concerned actually on the healthiness level. They are talking about the prudential practices. They are very much concerned on the implementation of good corporate governance and others, just to make sure that financial institution in Indonesia, in case of Indonesia, of course, we make sure that everything will be all right as far as the financial healthiness of each single financial institution. But in Indonesia, in addition to focus very much on the healthiness level of the financial condition, then we ask by our regulation also to facilitate and bring the important topics, including sustainable finance, including, for example, bring about the financial inclusion, for example, because there will be a lot of challenges recently as far as the financial institution concerned in Indonesia. Sustainable finance is becoming one very important area and topic that we discuss in addition with the financial inclusion initiative that also undertaken for quite some time in Indonesia. That's why when we are talking about the healthiness level of the financial institution, but at the same time we're proposing and pushing financial sector toward any particular area, then perhaps there will be some risk, conflicting between these two, On the other side, we try to convince the healthiness level, so very much on the stability issues, making and creating stability financial sector in Indonesia, but at the same time, we also introducing and bring all the financial institution to the concern of the development. Yeah. Let's say we use word development because it could be sustainable finance, it could be financial inclusion, it could be lending to the priority sector, it could be focus on small and medium enterprises and things like that. So this is the combination. How we strike the balance, it seems to me, is very important. Bringing the stability, because the financial institution in Indonesia not only good in financial condition, well managed and well capitalized, but also they are looking after the concern on a lot of development issues that is very important for Indonesia at the moment. That's why then we come up with the topic with sustainable finance. So this is very important. And then sustainable finance itself, I think we have already discussed that this is also very important. That's why when we introduce this topic to the financial institution, then we have to grasp the ideas and then put inside all the important ideas and bring to the industry to be discussed, because dealing with the sustainable finance is not necessarily a kind of additional burden for the financial institution. I would like to avoid this kind of sense from the financial institution views on this. Dealing with sustainable finance is also profitable. That's what I would like to bring to financial institution. That's why then creating sustainable finance and making profit from the sustainable finance is there. I mean, they are part of the package. That's why it is very important then creating understanding not only from the financial institution in Indonesia on the opportunity and also the responsibility related to this area by the financial institution is very important, and creating awareness from the government agencies is also very important. I'm the true believer the combination between top-down and bottom-up approach, because if you rely very much on the top-down approach, everything coming from the top, the government telling everything to you, but then there is no buy-in, I think there will be very difficult situation. But in other side, rely very much on the bottom-up approach, I think it is also will not be effective. So combination of these two seems to me is very important. Yeah? And Indonesia, and I'm trying to convince everyone in Indonesia that we have to build our capacity based on these two approaches, top-down and bottom-up approach. Top-down approach, a lot of initiative coming from the governments, or at least the government agencies, related agencies, including Indonesian Financial Services Authority, the Central Bank, the ministry, and things like that. They are coming with understanding and then policies initiative. In my case, as a chairman of the Indonesian Financial Services, I think we discuss regularly with the financial institution. We provide guidelines, we provide incentives as well to all financial institutions. We are very much too keen dealing with the sustainable finance. Even we provide an award, award for those who are financial institutions who are, presenting concern on the sustainability finance. So that's very much coming from top down. Very recently, even further, we provide the kind of roadmaps in implementing sustainable finance in Indonesia, a kind of type of the top-down approach. We have a clear time frame when we push all the government-related agencies toward the objective of sustainable finance. At the same time, we have also clear time frame for financial institution also toward the objective of the sustainable finance. So that's a kind of roadmaps, creating demand and supply, supply of concern and also the product related to the sustainable finance, and also demand for sustainable finance product. So this is very important initiatives. Yeah. Well, from the bottom up, The challenge is very much perhaps lies on the capacity, expertise, information, which is very much important, So lacking on the understanding and capacity aspect related to the sustainable finance will block, the enough supply of a product comply to a principle on the sustainable finance. So these two areas seems to me is very important. Well, I hope this roadmap in Indonesia, we just launched a couple of months ago, at least at the moment, we very much our energy now conduct the kind of the communication, socialization about what the importance of the sustainable finance for Indonesia. In addition to the the issues related as a background, Indonesia as a member of G20 committed to reduce the emission and things like that. I mean, we already know that, but then from the point of the financial institution subject, we also bring the importance of this, because again, I would like to bring this issue not only as an additional burden for financial institution, but very much bring this as a potential future area in doing business, something like that, because this is very important. Shifting understanding of the way people see the role of this or the importance of this area. The other things that I would like to underline is how we create a sustainable finance is not the area something there, I mean, in particular when this particular time when economy is not easy, the economic development or economic growth is slowing down, people start looking very much inside how we can survive with this global economy declining, and then suddenly we forget everything about the sustainable finance, as if sustainable finance is over there and we are here now, something like that. I think if we still in this situation, I don't think we are in a good position, in the position that we would like to see, as far as the sustainable finance concerned. That's why then, how to avoid a kind of dichotomy, understanding between other finance and sustainable finance. We would like to combine sustainable finance is also part of the mainstream in finance. So this is very important to bring this. So sustainable finance becoming one of the mainstream finance, and then after that creating a lot of variety of sustainable finance product, which is very much potential for financial institution creating money and also raising the social responsibility of the financial institution. So this is very important. As far as the regulatory or supervisors concerned, how we bring this into a mainstream finance, that's why we view this as part of the, I call it the risk management, because as far as risk management concerned, as you may aware that financial institution basically very much concerned on managing risk, They are facing the liquidity risk, they are facing the credit risk, they are facing the market risk because of the dynamic of the global economy. But now they are also concerned because of the other risks, they are coming if you are not comply with sustainable issues, for example. That's why then we are also creating other risks, which could be reputational risk, could be operational risk, could be legal risk, and so on and so forth, because it's very much interrelated. That's why then, if we would like to see the behavior of the financial institution that putting sustainable finance as part of the whole finance, I think we can bring our capacity, develop our own capacity as regulator or supervisors, and also developing capacity at the industrial level. How then this part of the risk management issues? So this is very important. If you see this from the risk management issues, and then maintain this corridor, maintain this view, which is based on the risk management views, and then developing option, bringing sustainable finance to agricultural sector, bringing sustainable finance to the plantation, bringing sustainable finance to the mining industry, bringing sustainable finance into other economy. I think then we are becoming, creating a wider opportunity, and then creating a lot of option and possibility for financial institution dealing with the topic related to the finance, sustainability finance. So that's very much the things that I would like to say in this very important occasion. I hope give you some background where I come from. We would like to push our financial institution, have a clear awareness on the importance of sustainable finance, but also creating the sustainable finance is the future opportunity of financial institution to do business, and then improving also awareness on the social responsibility, and putting a balance between people, planet, and profit into a single approach. I hope then creating, again, a good opportunity for financial institution in Indonesia. I think with that I would like to end my presentation. Thank you very much.
I want to first begin by thanking Pak Muliaman and setting a context for this discussion. When we had the first Sustainable World Resources Dialogue, honestly, I tried to speak to many of my friends who run banks, and they said, banks, yes, sustainability, yes, but what's the two got to do with each other? The frame still remains quite weak, but I think Pak Muliaman's remarks really show that there is progress in some sectors. I think Pak, really, you are, to me, and those who follow this area, a hero. Pak also has a book in quite a lot of detail, to me at least, it's in Bahasa though, about how to not just talk the talk, but begin to walk the path, training programs. Now, earlier on, you remember the Singapore minister also spoke about other initiatives, including those being taken by China. As China hosts the G20, I think we're starting to see a mood in China that's different. And we hope that Professor Wang, who's joining us from China, will share with us her perspective as Deputy Secretary General of the Green Finance Forum, which advises the People's Bank of China on this important issue. And while I said that friends who ran banks 3 years ago weren't into sustainability, some international banks have always been. And on my left is Ms. Judy, who is the CEO for Standard Chartered Bank here in Singapore, and SCB, Standard Chartered Bank, has been one of those banks which knows Asia, but has brought in a lot of international leading-edge standards into this area. Pak Muliaman, I think, has set the stage very well. We are at a point where the financial community must start to take this seriously, not only as a risk, but as you said, an opportunity. And then the question comes as to whether others, besides regulators, international banks, national and regional banks, investment community, and further down, will they start to also respond? So I think that's the broad context this panel is about. That's the stage that Pak Muliaman has set for us. I'd like to begin by turning to the two ladies to share their views. And I've forgotten which order we're supposed to go in. I think it's Judy first.
Okay.
Yeah,
right? I think so. Good afternoon, everybody, ladies and gentlemen, and distinguished guests. And thank you, Simon, for inviting us to be part of this panel. I'm going to talk about the role of financial institutions in terms of supporting sustainable financing. Earlier, we heard from Pak Muliaman around, it is very, very important for us to really think of sustainable financing as something all of us are responsible for. There's a Chinese saying that says, 前人种树，后人乘凉. Translated into English, What it means is our forefathers planted trees so that our next generations can enjoy the shade. And so really, if you think about sustainable financing, it's really something we need to do now if we want to create a sustainable environment for our children and our children's children. I have to say, it is not an easy path. It's not an easy journey. And I guess that's all the more we have to start now. So I guess the question next is, who is responsible, right? It's really easy to have just a top-down approach, right, where we rely on the government to do all the work. But I think increasingly, business leaders need to also think of their role being a very important role to promote sustainable financing in the future. In Standard Chartered Bank, as a bank, we feel that it is our role to play a very important part of that journey. Our brand promise, which is here for good, reflects our commitment to being here for the long term. So I'm going to spend the next few minutes to share with you how we go about to drive sustainable financing across our businesses. What we do is really in three buckets. First, it's important to have a good framework, right? Next is how do we then leverage on that framework to work with our customers, to encourage them, to support and incentivize them to continue to raise their standards around sustainable business. Then third is how do we then support the rest of the industry to influence or to shape policies as well as share best practices. So let me start with our framework. In 1997, we implemented our environmental and social risk framework to operationalize our sustainability agenda. And the framework is really based on standards developed for and developed by the financial industry, such as the Equator Principles and RSPO. As part of our framework, we have 20 position statements that cut across the high-risk industry sectors, such as forestry, palm oil, oil and gas, and so on. All our staff, from the deal team, our relationship managers, legal compliance, as well as our risk team, they are all expected to abide very strictly to the framework. We've also made our ESR standards very transparent to the public. So it's not a secret how we operate. It's on our website, and it's also in our annual reports, for example. This way, everybody knows what we expect of ourselves, as well as what we expect from our clients. And over time, of course, the ESR standards have continued to evolve, and we continue to update our standards to ensure that our standards are always in line with the industry best practices. The second thing we do is, of course, most importantly, that's why we're here, is to work with our clients, to influence, to incentivize them towards meeting higher ESR standards. Let me explain how we do this. We have a team of ESRM specialists. They come from various sectors. They're specialists, oil and gas, palm oil industries. Then our relationship managers, who are also very well trained on our ESRM framework, it's their responsibility to assess their clients and every transaction against our framework to see whether they are risk to the community or to the environment. And if they do identify the risk, what they have to do is bring that deal or the clients to the specialist team. And together, the relationship managers and our ESRM team, they're supposed to then work with our clients to help them develop solutions to mitigate their risk. Often, this will mean that this will require our clients comply with industry guidelines and standards. For example, in the palm oil industry, our palm oil clients would have to become members of RSPO. Very often, we also embed ESR conditions in our loan documentations, as well as we have stipulated timeline. We also tie our loan disbursement in tranches linked to how our clients have progressed in meeting those standards or those conditions in our loan documents. Where clients or transactions warrant additional level of scrutiny, we escalate these transactions to our global committee. Incidentally, this global committee is called the RRC. R stands for Responsibility, Reputational Risk, and Reputational Risk Committee. And earlier, Muliaman talked about, this is all part of risk management, reputational as well as responsibility as a bank. So this committee is empowered to turn down deals or to assess the deals if we feel that the clients are not committed to take the necessary step to improve the standards. Of course, we often prefer to work along our clients to help them mitigate the risk, but very often we do find ourselves having to walk away from a deal where we think that the risk is not adequately addressed. So the third bucket is around our role in working with the rest of the industry and other industry bodies to share best practices, capabilities, and know-how. Last October, ABS issued its guidelines on responsible financing. The guidelines are really an important step towards ensuring lending decisions in Singapore take place along environmentally sustainable principles. The banks in Singapore are fully committed to implementing the guidelines, and we've seen progress, or we've seen banks come out to articulate their visions, and they are committed to raise awareness as well as build capacity to be able to comply with those guidelines. But the next critical step after that is really around developing and implementing a framework so that they can actually operationalize the vision. And ABS has been very active in supporting these banks to either integrate the ESG principle into their banking governance framework and holding master classes showcasing sustainable financing practices in forestry and palm oil sectors. International banks like ourselves, who are pretty much advanced in this journey, we do a lot of work with ABS to support them. We're part of teaching the master classes and so on and so forth. In conclusion, the work done by ABS underscored their commitment to raising industry standards on sustainable banking practices. This is a very important start. We're moving in the right direction, but clearly there's a lot more we need to do. The current haze problem is a complex issue, and ABS guidelines is definitely not the silver bullet that's going to solve the problem, but what the guidelines will do is set the next stage for the banking industry in Singapore to have a more structured and transparent framework to develop and implement responsible financing. Thank you.
Thank you, Judy.
Thanks.
Our next panelist is Professor Wang. As I mentioned, she's the Secretary General of the China Green Finance Committee, which advises the People's Bank of China. Green finance has been a key element of China's 13th five-year plan. And earlier on, we heard from also another Chinese speaker about how sourcing companies, consumer companies, are starting to move in this direction as well. Professor Wang, please share your comments.
Okay, thank you. And first of all, thank you for inviting me to attend this high-level conference. And I'm very glad to share China's experience on green finance. And you all know China, in recent 10 years, China has experienced rapid economy growth, but with high economic environmental costs. You know, as a Beijing citizen, and when I have meetings with friends in other cities, and they will say, "You are so lucky to escape from Beijing's dirty pollution," and you know, I'm feel a little bit sad, you know, and also Beijing's neighbor Hebei province is the highly polluted province. and we should find a way to solve the problem. I think the government, China's government, and also the public, the general public have already realized this problem, and China need to find a way to do the economy transition to the green economy transition. And so finance plays a very important role in green economy transition. We all know that for each country, a large amount of money is needed to explore green economy transition. A systematic and efficient green finance system can attract private investment. And also the limited limited public fund could leverage several times of private capital. So we need this kind of green financial system to gather more money to invest in green area. And compared with the weak environmental regulations, actually China's financial regulations have strong influence on the financial institutions and their clients. You know, because most of our important financial firms actually state-owned. So the regulations could have a strong influence on them. But for a long time, manufacturers always pursue economic benefits at the cost of environment. And the local government always turn a blind eye on it because of the GDP and also the governor's promotion. And the financial institutions always also act as the complaints to pursue their benefits too. And since now have changed, but the contradiction between short-term economic growth and the long-term environmental protection is still existing. So it's a long way for awareness building and behavior change. However, China's financial regulators, they just I mentioned, they have strong influence on the financial institutions. So because the assessment of financial institutions is related to their business scale and the business range, and also the leader's promotion. So consequently, if a top-down finance system built, it will definitely play a positive role on green economy transition. And I just, Dr. Hadad, you make a very impressive presentation on Indonesia's sustainable finance roadmap. I totally agree that we need a top-down and a bottom-up. And I think China now is building this kind of green finance system in the whole financial system. Yeah.
Well, thank you very much, Professor Wang, for those very succinct remarks. Can I start with some questions and comments? Professor Wang went a little bit shorter than I expected, so maybe you should ask her first. If I could ask you, you mentioned how the regulators of China, of course, have very strong direct influence over the banks, since the banks are mainly state-owned. So has this message started to, in a way, be digested by the banks through the regulatory pressure?
Yeah, I think so. Actually, in China, the green finance is not a new word. The rudiment of green credit policy actually acted in 1995, and then from 2006, there are three green financial policies. It's a green credit, green securities, and green insurance policies is issued. Were issued one by one, but it's the feedback is weak. The feedback is not so strong.
What do you mean feedback? You mean the take-up rate? I mean the people putting products out?
I mean the financial institutions' feedback.
Okay.
Yeah, but in 2014, PBOC, People's Bank of China, and UNEP Inquiry set up a Green Finance Task Force, and 17 groups, research groups, is working on policy recommendation. Sorry. And after 3 months work, we submit 14 recommendations to the PBOC's governor and then to the high-level governors. Our Vice Prime Minister feedback to it. And so the green finance, for the first time, is as a national strategy in our eco-civilization overall reform plan. And then, as you just mentioned, our 13th five-year plan, also green finance is a part. And the following 35-year green reform plan, green finance will be an important part in it. So this is the national strategy. And for the financial institutions, actually now they have realized, and they feedback very actively. And for example, last year, at the end of last year, PBOC issued a green bond policy, and Shanghai Pudong Development Bank and China's Industry Bank, they issued, they got the approval of 50 billion RMB, 50 billion RMB to issue green bond, and they issued, and then Qingdao Bank also got the approval to issue green financial bond. And now I know that there are a lot of banks are waiting to issue.
Okay, so I put it this way. Pak Muliaman earlier said about the top-down and the bottom-up combination. And so what you've seen in China is that 2006, almost a decade ago, 3 green schemes were pushed from the top down. And now, since 2014 or so, and very recently, you start to see the take-up from the banks. Is that roughly correct?
Yeah, I think, yeah, I agree. Actually, from 2006, green credit guideline is active, but it's a voluntary regulation. It's not mandatory. Yeah, so the green credit guideline is a statistic system. So now many banks, they have the awareness of the green credit. But I just finished a survey in Guangzhou the following days, and I found the local level banks, they totally know what's green credit, but
they know or they don't know?
They know the green credit, but the standard is totally different. It's totally different. When I ask them how much green credit in your bank, they will say 90%. I'm astonished because the total China's green credit actually is 9%. So I ask why you say you are 99%, and they said, and finally I found that they put all the loans they thought is green. Yeah, so
green is the new flavor, so the new favorite color, so they just label everything green.
Yeah, I think the statistics system is a how to say, it's a 总部, how to say, it's a
head office? No.
Yeah, it's a head office. It's head office. Yeah, and head office may have this kind of a database, but for the local level, they will not have. They will not. Yeah.
Thank you. With those questions, we've pulled Professor Wang a bit more out in detail. I think overall, our keynote panelists and 2 other panelists have given us reasons to be optimistic that the, sort of the trend is in this direction. But despite the overall optimism, I think they've also sounded real notes of, a realism. Judy Su, for example, has talked about how ABS has started training, but, left the question of whether that has started to transmit. And frankly, some of the questions from the audience in the app show this. One question is, it seems that Southeast Asian banks have been slower. Another question is, has any financial institution in this region divested from companies who are driving deforestation and haze? In other words, have these banks started to really digest these broad principles and apply them, and sometimes in a negative way, to their clients? Last year at this forum, the WWF released a report that showed that most regional Singapore, Indonesian, and Malaysian banks were not on board yet. So what is the present temperature? It's going up, but are you happy with the present level? What needs to happen next? Has anyone pulled any plugs on loans?
Well, I mentioned during sort of my session that in Standard Charter, we have. I don't know about pulling plugs, but at least we've many times walked away.
Okay.
But what we actually really want to do is to work with clients, because when this client walks away, he can go to another bank potentially, and life goes on. What we really want to do is work with our clients so that they understand there is a way to operate sustainably. And we want to help them reach that. So as much as possible, we want to work with clients. Now, to the point of, whether Southeast Asia banks are really slow or fast, I think the ABS guidelines that were issued last October is really a good step in the right direction. And it starts the ball rolling to ensure that all the banks here start to think about it, build capacity, build awareness. A lot of times it's also capacity and awareness. And that's something that may take time, but you have to start. And I think it's the rest of the industry that has to support everybody else to expedite it. And international banks like ourselves are very eager to support and expedite that process.
Okay, so engagement, help pull the clients up to the new standards. They're not impossible standards. And of course, try not to lose the client. That's the part that Judy didn't talk about, but I think that's obvious because banks, besides trying to get the clients up to the standard, don't want to lose the business if other banks are willing to loan without those conditions. Now, Pak, coming back to you, Pak, I heard that some Indonesian banks are now starting to scrutinize. I read that Bank Mandiri, the biggest bank in Indonesia, have said no more loans to, is it peatland? Is that true?
Well, it's true that we have the first batch of 8 banks who kind of piloted the awareness and the implementation of the sustainable finance. And one of the first batch of 8 banks is Mandiri. Perhaps it's not going to the peatland. The problem very much on the company who doing bad on related to the sustainable finance, and then bank must close the credit line, something like that. I mean, that's very much the issues. It's not only the peatland. Any sector that later, creating problems for the wider society, and then banks should what you call it, should cut the line, and then creating what you call it, the awareness, not only at the bank's level but also at the company's level. But perhaps before come to that point, I would like to mention the importance of the capacity owned by banks dealing with this. Perhaps the global banks that just Judy mentions, I mean, well, Standard Chartered is global bank, or other banks perhaps have some a global experience dealing with this, you know. In our case, perhaps we just started, you know, the awareness on this concern is growing quite fast, in particular recently, you know. And then capacity building on banks is very much important. That's why waiting for improving readiness level at the bank's level is perhaps never comes, you know. I mean, because it's not easy, you know. That's why then it is very important to combine this bottom-up initiative to assistance coming from the top, you know. That's why I'm working for quite some time with international agencies, you know, dealing on the capacity at banks level. We are facilitating, we are providing assistance, we are providing instructor and trainers. We bring a real case somewhere else and then bring to our bank situation on the related issues related to the sustainable finance. I mean, it is very important to recognize, in particular, perhaps not only in Indonesia, most of emerging market economies, you know, they working very hard to convince that major bank in their jurisdiction really equipped with better understanding dealing with this, you know. So, assistance for bank to work together with the clients and then assisting the client, but at the same time, I think also improving banks' own capacity, understanding of opportunity that open wide, you know, on this sector. For example, we have training activities for credit analysts of the banks to analyze, you know, the proposal coming from the sustainable finance project, you know. We have a proposal, for example, analyzing the potential of the micro hydro, for example. In Indonesia, there's a lot of micro hydro project because there's a lot of mountains and tropical forests, and then a lot of power coming from the micro hydro. And then, but then we don't have any enough understanding. I mean, the banks is not enough understanding. So capacity is very much important. And then combining all the resources that banks have and also combining the resources that, you know, the government or the related agencies have, I think it is a good way in developing awareness from both sides. Government also should learn, because government not pretending that know everything about this topic. You know, they are also learn from other jurisdiction, you know, and then contributing to this, what you call it, the collaborative efforts, you know, within the industry, the potential customer and the government together, you know. That seems to me work very, very efficiently. And then we already, you know, start going with some projects already as far as the micro hydro concern and other, you know. I mean, this is very important.
So basically, one cannot do what one doesn't know how to do. That's if banks try to screen loans, but they don't know how to do it, they have to have that capacity. And I think you told me earlier, correct me if I'm wrong, Pa, that in your case, you've actually signed memorandum of understanding with functional ministries. So the Ministry of Forestry can help your agency understand how to evaluate loans by banks to those companies in the sectors. So that's what I mean by the expertise from government needs to be developed and shared with the financial agencies. Professor Wang.
Yes, I think there are four reasons could explain the problem you mentioned. And also this is the roadblocks among China's financial institutions to achieve the compliance. I think the first is the environment and climate change issue factor hasn't been the endogenous factors in their business, actually. And so I can totally understand the financial institutions, they will not invest because they are profit organization. So if now the environmental risks is not a huge risk for them, they will not do that. They don't actually, sometimes they don't care if it's green.
Yes.
If this green project has profits and high profit and lower risks, they will invest. So this is the first reason. And the second is, I think now we haven't the unified definition of green. What's green? It's very interesting in China. Now I share lessons in China. You know, China, we have a CBRC, NDRC, PBOC, and we have 3 categories for green. So green credit guideline, we have 12 categories for the green credit.
Stay there, those initials, PBOC, I understand. Would you like to tell the audience who the other 2 agencies
Okay, CBRC is China's banking regulator commissions.
They're OJK.
Yes. Yes, and NDRC is China's National Development and Reform Commission. Is the most powerful government in China, and because China's bond market is a flexible. We have 2 markets and 3 regulators, and so different regulators they will have different categories. Yeah, but now NDRC have NDRC's categories and CBRC have CBRCs, and also PBOC have PBOCs. Now our Green Finance Committee now are working one thing is to communicate with these three regulators to help them have a unified definition of the green. What is a green project? So, and also there's a good experience. I think is now for the green financial bond and the green enterprise bond. We have the third-party verification. So this third party could verify what's green for them. Yes.
Good.
And I think the third reason is that our incentive mechanism are not enough. Financial institutions, just as I said, financial institutions, they are driven by profit. So if we could have some flexible mechanisms for them to share their risks, or and maybe they have the motivation to invest in green area. So I think to set up the financial, we need not only punishment but also incentives.
Yes.
Yes, and fourth, the two you also mentioned the awareness, the capacity building. Yeah. So I think the next step we need to, I think first the law. You know, China now we are revising the commercial bank law and also securities law. So we may put the lender's liability in the commercial bank law, and also we may ask the IPO they will disclose their environment issues
before listing.
Yes, right. Yeah. So this is a law level.
I guess this is what Pak Muliaman meant by mainstreaming the environment issue, to make it part of the profit, part of normal business, and part of the overall risk assessment of whether it's a loan or the initial public offer, etc. Could I address 2 questions that have come up? First, a very fundamental one. People need to be convinced that if you want a mainstream environment, that a company that is better managed on the environment is better managed, that basically it's got more chance of being profitable, or at least less chance of being a complete train wreck. I think I'll ask that of Judy too, because you have to assess risk. Is there any correlation between being well-managed overall and better on the environment?
That's an interesting question. I mean, definitely for us as a bank, we see the fact that we are able to manage the risk of reputational risk or be operational risk, or to help our clients with managing environmental and social risk. We feel that that is an important part of the role of banks and companies if, as part of their responsibility. It really depends on how you measure success and well-managed, right? If you measure just profit, if you just measure market share, I mean, then maybe these things in the short term are not people's priority. If we then measure sustainability of a company, relevance to the society and to their customers, then these things become very important. I do believe that sustainability is something that is important for the long term. And if we want to measure a success of a company over the long term, and I do think there's a high correlation between managing sustainability and a well-managed company.
I actually, in my own studies, have come across some statistical correlation that basically a company that can measure its environmental footprint better would be better governed, be able to measure the matrix, etc. So it would tend to be better managed. And that correlation is stronger than, say, on the human rights front. So there seems to be some statistical sort of correlation. I don't know whether Professor Wang or Muliaman can help with this question. If not, we'll move on to the next. Sorry, go ahead, please.
Yeah, I think it's very straightforward, seems to me, that the companies who comply with the principles will have a kind of the sustainable growth, which is good for bank as well, which is good for the stakeholders of the company and for the whole society. I mean, there will be some economic and social impact because of the implementation, and there will be the opportunity for the company, I think from bank point of view, I think very much seems to me related to how we be able, as Judy mentioned, managing the possible risks, that will arise later on. It is very important to monitor, to work together, and then to agree at any certain level how we have to move forward as far as the principle concerned. I mean, that's very much one of the item that banks should also responsible to see this, because finance, access to finance is just only halfway to go. The rest of is basically how we be able to monitor, and then to convince that creating a big impact to not only to the companies itself and to the banks, but also to the society. So this is very much how we be able to monitor the progress. I think this is also very important, because then government should also intervene this, by a kind of monitoring program and things like that. From our side, for example, we ask bank also to issue what kind of what we call it the sustainability report, to whom the lending, and then how then impact to the society and to the wider economy and things like that, and it should be reported on this, what we call it the sustainable impact, a sustainable report, So this kind of the activity, because opening finance per se is not the ultimate objective. The ultimate objective basically the total impact to the society, which seems to me is very important.
It's a very good concept. Let's open some questions and comments. Yes, I have two hands, gentleman right there first. In front, the gentleman in the blue shirt. The second last row, yes. Second last table, yes. Would you introduce yourself and ask or make your comment briefly? We'll take several and then please go ahead.
Thank you. Thank you.
It's working, go ahead.
Okay, thank you. My name is Fadil Hassan. I'm from Indonesian Palm Oil Association. Just would like to have a question to all of you about the sustainable finance, especially with regard to the incentive, to encourage more, to encourage more the client of the banks to adopt and practice the sustainability practices. Is it possible, for example, that you give incentive in terms of the different
Lower interest rate.
lower interest rate, for example, so that it will lower the cost, for the companies to operate. Yeah. Thank you very much.
It's a very good practical question. Can I take a question from the gentleman in the next table? I saw a hand earlier. Then here on this side, there's another, after that, number 4. Please go ahead, please.
Yeah, thank you. My name is Kiki Taufik. I'm head of Indonesia Forest Campaign from Greenpeace Indonesia. So what I would like to asking, when you're talking about the green financing, that how to monitor that your client regarding with the you always said that the sustainable report and so on, but then how to, I mean, because we not regarding with the transparency, what I would like to say in here is some company need to more, a lot of company already released the commitment for the forest conservation. And then you also, from the finance thing, they follow the RSPO criteria and so on, but then still in the field that a lot of fire, a lot of clearance in the field, also a lot of case in the field. But then that's why I think the important thing for the green financing also to push the company to release the transparency. So
Okay.
regarding with the concession data, regarding with the
Thank you.
with the supply chains, it's very important to public to know, especially because this is in the stock exchange. Yeah? So you people should know about the how the company
Okay, got it.
working.
So how do we ensure not just transparency at the point of the initial disbursement of the loan or signing of the loan, but on an ongoing basis, especially for listed companies? And the first question of incentives. Now let's take the one more here, number 4. Yeah. Microphone number 4.
Hi, thank you very much. My name is Calvin Kwek, and I also work for Greenpeace in China. And before this, I used to work at Citi. I just have a quick point to also share. I think when it comes to sustainable finance, it depends on what kind of sector you're looking at. And in some sense, sustainable finance can actually lead to better risk mitigation. So if you look at the energy markets right now, what's happening around the world, where essentially China's economy is slowed down, and therefore industrial production is slowed down, and energy demand is slowed down. A lot of coal companies are finding they can't export into China anymore. And this is actually a very interesting information for banks to know about. So in some sense, there's a lot of discussion now on what they call stranded assets, the idea that oil and gas reserves can't be burnt. And I think my point to the panelists, I think, is that in the financial sector, starting a conversation about how sustainable finance can actually be a better form of risk mitigation might be the right way of going about it, as opposed to it being some form of CSR. So that's my little thought, my food for thought.
Calvin. Okay, so those are the 3 questions. One, I think the last one is really about mainstreaming. He's concerned that, in the assessment of the decision to invest or to loan or not, it will be seen as CSR rather than intrinsic. So how do we make sure that it really is a full evaluation? And you said earlier, Professor Wang as well, there are different definitions of what is green. Should there be a third-party audit? Who is it up to decide whether this will be a problem later? So there was one question about incentives, one about transparency, and one, as I said, more about how do we evaluate the project. Can we also sort of take your closing remarks? Because we're down to about 6-7 minutes on the stage. So if I give each of you about 3 minutes, if I may, if you could respond to any of the 3 questions you want, and then give your closing remark. Can I start, Professor Wang?
Okay, I will feedback to the incentives. Yeah, actually, in China now we are thinking about the tax free. We talked with the Ministry of Finance if we could have some tax free measurements to encourage green investors or green issues. This is one thing. And the second, I think, is the credit enhancement measurements, such as now we are helping local government to setting up the green guarantee funds, and so this and also local government could give some subsidy for the loans and for the green loans and green bond. So this is a kind of a green enhancement measurements. And for the last assessment, I think now ICBC they are doing the this is a pressure assessment. So later, maybe China's banks will all use this environmental pressures, environmental risk pressure assessment. So it is very important for the banks to know how to assess their assets, maybe stranded assets. Yes. Okay.
Thank you.
In terms of incentive, our banks do work with various bodies to ensure that we actually, when we work with the clients in coming up with the solutions, we do put in incentives, not necessarily interest rates, but potentially other types of incentive to help them in going about their business. So I think this is something we can explore potentially with our other regulatory bodies in Singapore. Not necessarily incentive in cash, but there must be many other forms of incentive. In terms of transparency question, I mentioned earlier that once we disperse a loan, we tend to disperse it over a period of time, and we always go back to our clients to ensure that they're actually really working towards in lifting the standards. And that's a very, very disciplined process. Very often we use third party to help us accredit the customers to ensure that they are really meeting those conditions in our loan documents. And as final remarks, again, I have to say it's a very long journey. It's never a good time to start, whether the economy is doing well or whether the economy is not doing well. We've been at it since 1997. It's been a very long journey, and we're very happy with the progress that we're seeing in China, in Indonesia, and now we'd like to see, obviously, more progress in Singapore. And together with ABS, banks like ourselves and other international banks are very committed towards building a much better place and very dedicated and committed to sustainable financing.
Weren't you going to say here for good again?
Definitely, and we are here to deliver our brand promise, here for good. Okay. Thank you, Simon.
Pak Muliaman.
Yes. Well, mainstreaming is very important, perhaps. Bringing into the mainstream finance is very important. And if we be able to mainstreaming this, then I think there always a way, Even you would like to mitigate the risk, or even you would like to ask the government to intervene, because it is very clear if you mainstreaming all this process. It seems to me there will be a way, how to mitigate the risk, for example, and then again, because of sustainable finance, the element of the social impact is very important, and then there is always reason for government to coming in with a bigger, contribution and things like that in whatever form. This is very important. So I don't think I don't have a problem if we be able to bring this to the mainstreaming. And then we approach this not only on the social issues, but also creating some profit, because we are mainstreaming. If it is mainstreaming, there is no problem with transparencies because it is already embedded on the process, So the mainstreaming is very important, Simpson. Thanks, Timon.
Thank you. Will you join me in thanking this panel for dealing with a very technical but important subject? Terima kasih banyak, Pak. I really enjoyed that. Thank you.